Welcome back to Money Elementary's Cheese Me,
Wah, 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 wah.
where finances meet facts with just the right amount of chisme. I'm Heidi.
And I'm Vanessa, and if this is your first time tuning in, bienvenidos. Every week we break down the financial news no one else is gossiping about, but definitely should be.
Today's episode, it's all about the return of student loan payments. And to explain it, imagine you've been lounging around in a hammock for 5 years. Gentle breeze, no responsibilities. Then out of nowhere, someone hands you a to-do list a mile long and it says, break's over. That's what's happening now with student loans. The pause is ending and the obligations are back.
And the obligations are massive. The Department of Education is pulling out receipts, and it's as long as a CVS one. Needless to say, the economy may feel the shockwaves.
Joining us, our co-host and resident financial analyst, Mia.
Mia. Hey, girl, hey.
Hola chicas, hola audiencia. I brought the receipts, the rates, and just enough attitude. Let's get into it.
After a 5-year pause due to the pandemic, federal student loan payments resumed on May 5th, 2025. How did this happen all of a sudden? On March 7, 2025, President Trump signed an executive order directing the Secretary of Education to revise many student loan policies.
Yep, that's right. Linda McMahon stone cold stunned us with this one.
Rock bottom! Rock bottom! That's rock bottom to our bank accounts. Any WW fans out there?
It's actually WWE now. Get it
Whatever,
right. Get it
whatever.
right. The Department of Education is back to collecting, and borrowers are feeling the pressure. I'm feeling the pressure.
Approximately 42.7 million Americans owe over $1.6 trillion in student debt. With payments resuming, many are scrambling to adjust their finances.
And it's not just about making payments. The consequences of defaulting are severe, including wage garnishments and tax refund seizures.
The restart isn't just personal, it's economic. A wage garnishment is when the government can take part of your paycheck before you even see it. And if you were expecting a tax refund, they can take that too. It's called a tax refund seizure, and yes, it is legal.
Exactly. JP Morgan found that in areas where delinquency is rising, consumer spending is already shrinking. People are skipping the extras to cover the basics.
Nearly 1 in 4 borrowers are behind on payments. That's a big chunk of Americans tightening their belts.
Less spending means less business income, and that can mean job cuts or stagnating wages.
So we're not just talking about debt. We're talking about drag on growth. And when consumers spend less, businesses earn less. Okay, but here's the deal. People are choosing between loan payments and groceries. That's not budgeting. That's survival mode. Let's go over that again. Some people are having to do with less. Less groceries, less outings, less trips, less gas, less everything to avoid going into default. For those that have not made those adjustments, they will find themselves in a rude awakening when loan payments are taken from their checks by force. So eventually, everyone that has student loans will have to do with less due to student loan payments.
And there are changes to how the government collects. For example, they'll stop garnishing Social Security checks from borrowers in default.
And there is great news for older Americans, but younger folks, if you default, your tax refund could vanish, and so could a chunk of your paycheck.
New legislation could make it harder to qualify for forgiveness programs, especially for grad students in high debt fields.
The stress is real though. Some borrowers are putting off buying homes or starting a family because of student loan repayments.
Others are juggling side gigs, not to get ahead, but just to stay current on debt.
Which may discourage people from becoming doctors, lawyers, or public servants. That's a long-term issue for society.
So what if you can't pay right now? Is there anything borrowers can do before falling into default?
This isn't just a money issue, it's a mental health one. We need policies that help borrowers thrive, not just survive.
There are two kinds: discretionary forbearance, when you ask for help because of hardship, and mandatory forbearance, which you could be granted if you qualify.
Yes, and that's where forbearance comes in. It's like pressing pause on your payments, but not without consequences.
Important note, interest still adds up during forbearance. So this is a short-term fix, not a free ride.
If you're struggling, go to studentaid.gov and contact your loan servicer to apply. Don't wait until it's too late. Now it's time for our recap.
Wop, 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 wop.
All right, here goes. Let's recap the tea. Student loan payments have resumed after a 5-year break, and millions of Americans are feeling the pressure.
Nearly a quarter of borrowers are already behind, which is shrinking consumer spending and weighing down on the economy.
Policy changes are adding stress, especially for younger borrowers, by limiting forgiveness and capping federal loans for grad school.
And we broke down the bigger picture, how all this could ripple into fewer teachers, doctors, and first-time homebuyers.
But there are tools. If you're struggling, don't ghost your loans. You might qualify for forbearance, which can pause your payments temporarily.
Just know that interest still adds up during forbearance. It's a short-term solution, not a long-term fix. But it's better than going into default.
You might get forbearance if you're dealing with medical expenses, unemployment, or your monthly loan bill eats up 20% or more of your income. Teachers, AmeriCorps workers, and military members often qualify too.
If today's episode helped you understand the student loan storm a little better,
share it with someone who needs it. Leave us a rating. And keep the cheese me going.
This is Money Elementary.
Money Elementary, where the wallet meets the truth.
Woo!
Toodles. See y'all later.
Bye.
Hi, everyone.
We are here at Money Elementary, Heidi and
Vanessa.
we want to clarify a few things before somebody gets the wrong idea.
Or a bad idea.
And as exciting or boring as it may be, please listen through all of our legal disclaimer information so that you understand up front that in this podcast, Money Elementary, we are not a financial advisor. If you need advice, go to your accountant,
CPA,
stockbroker,
real estate agent,
psychiatrist,
psychologist,
loan officer,
therapist,
financial advisor.
or a credit analyst.
Nothing said during Money Elementary episodes should be construed as advice.
We're just two sisters who like to talk about all the S that we've been through and who've learned a few things while attending the school of life.
I can't wait to graduate.
Oh no!
Just kidding.
That's the funeral. Well, that took a dark turn fast. Anyway,
Just two cute savvy sisters with a decent internet connection,
a microphone,
a computer,
and way
too much time. What? We don't have that much time on our hands.
No, we don't.
But bottom line, all the content we share with you guys is stories of our
True life experiences.
shared anecdotally, and is meant for informational and entertainment purposes
Only. We couldn't make this stuff up even if we wanted to. We hope you enjoy the information we give you and our show.
Thanks! This is Money Elementary.